Tom Panos, who is the auctioneer and founder of the real estate Gym, joins me. Great to see you, Tom.
Thanks for having you, Lucy.
Thanks so much for coming in.
Pleasure.
Before I ask you some serious questions about everything going on, and everyone's really in the thick of Australian real estate at the moment, but I have this kind of guilty pleasure that I like to pretend I've got upwards of $10 million, and I like to kind of peruse what's going on in the real estate market and see where I'm going to put that money. But depending on where you live in this state, it's of course the second most expensive state in the world. $10 million might not get you much out in the eastern suburbs, will it?
Look, I was having a swim in Bondi this morning and I was looking across at North Bondi, and I'm just going to tell you, 10 million in Bondi, by the water, more a unit than a house.
Can you believe that?
More a unit than a house if you want to overlook the water at Bondi.
That's absolutely nuts. But I want to ask you, how would you sum up 2024 in property and real estate?
Look, it started strong, Lucy, but the second half of the year, all the gains that started to take place throughout the year actually came to an end. The second half of the year, we started to see drops. The marketplaces that we saw significant drops was Melbourne. I just heard you talking about Melbourne's, current financial position, and I think Queenslanders should be giving Daniel Andrews a big present.
Because we've seen a big influx, haven't we? A lot of people leaving Victoria and heading up north to Queensland.
That's been the trend. So what we've been seeing is sell in Melbourne, buy in Brisbane, or towards the Gold Coast areas. And those areas, like to give you an idea, this year, and this is based on SQM's data, and look, most of the companies, RP Data, Australian Property Monitors, SQM, they're all pretty similar with their numbers. Brisbane went up 18%, whereas Melbourne actually went down. By the end of, look, it's probably finished at around 1.5% up, right? But that's not good, because when you look at places like Perth, up 23%. I know you've got a lot of listeners that listen through at Lithgow. Even they had a 5% increase. But what we saw is these interest rates slowly start to cause fatigue to the homeowners. And that happened from around August, September this year.
What about in Lithgow too? Because we've got a great community out in Lithgow that tune in to us at 2LT. What was happening in that space?
So Lithgow finished up for the year 2024 at an increase of 5%, which is not bad, right? When you look at Sydney, it was up 3.3% for the year. But by July, we were up in many markets 10%, right? So it was really that second half of the year, there was so much stock on the market, Lucy. But the most important thing is that there was this hope from homeowners that rates were going to come down, but they kept delaying, and many just could not hang on anymore, so they started selling. We saw more properties on the market in October, November and December than we've seen in recent years.
And it kind of paints a terrifying picture too, because you wonder just how much this impact of the cost of living crisis has forced these families into scenarios where they are having to sell their homes, which is really devastating. But what about the rental market too?
So the rental market, surprisingly, after all the heat that we've been hearing, it did get a little bit better towards the end of this year. However, we still have rows and lines of people outside rentals. And what we're talking about is we're not talking about properties out in the middle of nowhere, because there are more supply. But we're talking about where people want to live, people want to study, people want to work, 10, 20 kilometres within city centres. They are still very challenging markets.
And looking ahead to next year, Tom, what can we expect in the Australian property market? Is it going to ease? I mean, I feel like every year we're waiting for this bubble to burst, particularly in Sydney, right? Are they going to come down? They just seem to be going up. Okay,
so I'm going to say that I'm going to give a scenario. The scenario is that rates do come down within the next 6 months.
And that's based on the RBA's movements, right?
And that's based on the RBA's movements. But Lucy, we will say that there will be a federal election on or before the 17th of May. Mm-hmm. Now, I know that the Reserve Bank is independent. They are appointed by the current government. I would assume that there would be a decent possibility that Albo is going to love rates to go down before the election.
Is it going to happen, though? I mean, some are saying that it could potentially happen earlier. A lot of financial strategists and economists are saying that it's going to be May.
Yeah. So one thing that we've learnt is that no longer do consumers trust anything that's said, because they were told that rates were going to go down earlier on this year. It hasn't happened. It gets keep putting push. There was talk that it'll happen in February. I have a funny feeling it'll happen just before the election. That's what my feeling is. And let's just go through some of the numbers of what I think will happen next year. And this is based on data, and I'm using SQM's data here. Perth will be the standout. Perth's been the standout for the last 2 years, right? Perth, they're tipped to go 14 to 19% up next year. Brisbane, 9 to 14%. They're the two hot markets. Sydney will probably go down or stay flat, -5 to 0%. Melbourne, the same. So what you're basically seeing is a marketplace that has got sub-markets in them. Now, we no longer, Lucy, say, oh, what's the market doing? What we clearly know is that there are markets within markets. And there's also markets within suburbs. Like in one suburb, you might have one kind of property that goes crazy, like brand new properties that are turnkey, move in and enjoy without having the risk of hiring builders and all the inflation with materials. Those properties go off. In the old days, Lucy, everyone wanted to buy a dump, an unrenovated dump, and add value.
But no, my sister's just been through a renovation, and if you're listening, Katie, I'm sure your grey hairs are starting to sprout as you hear me talk about it. So many people are jack of renovations. The work that goes into it, Tom, and the effort and the money and the expenditure that you think will be of a certain budget, it almost always blows out, right?
I've never met, in my 40 years of real estate, I've never met any person say, we built and went under budget. It is always 20%, 30%, 40%. I hope she stayed married, because there's a lot of divorces as well.
She's married to a very good man, Kelly Egan. Shout out to him. Fantastic human being. He tolerates my sister too, by the way. Love you. But no, it's true. And, you know, at the end of the day, the stress and now with the cost of building supplies and the issues that we experienced off the back of COVID as well. I mean, we're seeing so many construction companies fold and go under, which is just devastating, really. But that's put a lot of pressure then on people in the property market when they're looking for a home now. You think also that you've managed to track down the cheapest house that has gone under the hammer this year. Where is it located and how much did it sell for? Mark Levy said earlier he reckons it went for $600,000. I can't wait for you to reveal this figure.
Nah, the cheapest house that sold that I'm aware of was in Moree.
Moree.
And it sold, get ready for this, for $20,000. And
what?
Not only that, it was on a quarter acre, over 1,000 square metres, $20,000. For those that people don't know where Moree is, it is actually New South Wales. However, I can tell you it had been burnt out. I don't have all the details on the property, but looking at the photos, it looked like it may have had asbestos. It may have. I'm not sure that it does. And you've got to look at it. You're basically buying land value. It's on the records there, $20,000, and it sold in February. And Moree is famous for one thing, actually, hot springs. People go there for hot springs. That's what it's famous for. But a house did get sold there for $20,000. Land value burnt out.
Wow.
But you got to remember, Lucy, like it depends what you can do with it, and often the cost of removing asbestos or just holding the property, council rates, land tax rates, they all come into account.
Oh, but the price of land too, Tom, before I let you go, I mean, it's just out of control. In Canberra, my father's a now retired builder, but, you know, you're staring down the barrel of just $500,000 on land down there, 700,000 in some cases. I mean, that's just ludicrous to me. It's certainly not being helped by the fact that we have a pretty inept government that are putting us in a situation where we can afford to buy our homes. Tom, Panos, fantastic to have your company. Before I let you go, I've been asking a lot of my guests, what's your motto for 2025? Not your New Year's resolution, but your motto.
Look, I'll give it a real estate flavour. Time in the market not timing the market. So
Ooh.
don't sit there and try and say, oh, it'll be at the bottom just before the rates go down. So just accept it. Time in the market, not timing the market.
Couldn't have said it better myself. Wonderful to have your company. God bless, and have a wonderful 2025, Tom Panos. Looking forward to seeing more of you.
Thank you, Lucy. You too.
Time for a quick break.